This is an important Palantir update video. After bottoming out at $6.71, Palantir has rallied 29% and is finally heading in the right direction. We're going to talk about Palantir's business. Is the price rise sustainable? Are we headed back to $20 per share? Or is this just a dead cat bounce as Michael Burry warns? Lastly, my thoughts on Dilution from Alex Karp, the CEO, and my 12-month price target. I'll wrap it up with some option analysis as well. You're in for a lot in this video, so make sure you stick around. If you appreciate this deep research, leave a like on the video. I also have OptionFi software in the description, which is an AI machine learning algorithm that picks options to trade weekly, built by an ex-hedge fund coworker of mine. And if you want to see my personal trades and live trading sessions, there's a link to book a free call in the description. Let's jump into the analysis. We'll start off with Palantir's business. Palantir is a software company, as you guys already know, which gives organizations and government institutions the ability to unlock data insights. Now, I love software businesses because when they stabilize, they have huge, consistent revenues and high margins. Adobe, for example, is a mature business and trades for over 10 times price to sales ratio. Palantir is currently trading for around 10 despite growing faster. This is the first way that I analyze a tech stock, and based on this alone, I know Palantir is not extremely overvalued. In fact, I think it's a very fair value right now and represents a lot of growth. It's trading for a very fair price, and I'm going to show you how I'm going to play this stock shortly. Palantir has had bullish expectations of over 50% revenue growth baked into the stock since their IPO, and now their share price has been butchered as a result after the company reported a slowdown in the business. But despite the bloodbath, Palantir grew revenues to $1.5 billion for fiscal year 2021, up 41% year over year, which is actually great for a company with normal expectations. They also have large clients with deals well into the millions, so missing just one deal could be the difference between 40% growth and 50% growth. At some point, they will hook two big fish and the growth can be 60% year over year or higher, and I bet the stock would shoot up at least 20% in that scenario. That's an event that will occur, it's only a matter of when. In order to value Palantir, I plugged in the latest financials into my valuation model, which uses the discounted cash flow method of valuation. At the current growth rate in my simple Excel model, even with stock-based compensation and a discount rate high like Tesla, the stock is still worth $10 to $11 per share. The price to sales ratio, which I really look at for tech stocks, has compressed from over 30 down to 10. That's why I think it's reasonable, and given growth expectations, we have about 20% upside from the current levels. My price target is $11 in 2022. However, if they report some good numbers in the next 4 quarters, I would not be surprised to see the stock rise to $20 per share. I'm going to show you some option insights, but first, I do want to point out Palantir over the last 6 months has seen 3 insider purchases, but 12 stock sales by insiders. The stock count equals a net of negative $746 million worth of shares sold, which isn't great to see. This shows many insider investors were using the IPO as an opportunity to exit and cash out. This was expected, but ideally, now that the stock has declined so much, I would like to see some more insiders buying shares. The good news is everyone who wants to sell has already done that. Back in 2021, Palantir CEO Alex Karp has been exercising his options issued a decade ago by transferring them into shares at a discount to the market price and selling them on the open market, which has created a selling pressure for the stock. So I'm not that surprised to see this company being very volatile given how much shares Alex Karp owns. The insider data shows that in Q4 alone, he sold over $100 million worth of Palantir shares. However, once those options expired in early December, he stopped selling his shares, and the selling pressure which he created for the stock in the past no longer exists. On top of that, Alex Karp, along with the insiders, continue to own slightly more than 10% of the shares outstanding combined, which indicates that they still have faith in Palantir's ability to create shareholder value. Considering that insider selling from Alex Karp no longer creates an additional selling pressure for the stock, while the stock-based compensation decreases, it becomes easier to justify owning Palantir stock. The macroeconomic environment of rising interest rates and inflation has caused Wall Street to be extra sensitive to growth stocks, which could also make Palantir cold until they stabilize. But I expect that to happen within 12 months. It's better to get into a great company at a great price than wait for it to be noticed by others. My last concern really has to do with stock-based compensation, but here's the full story. Stock-based compensation is common practice for technology companies like Palantir, and there's often a surge of it when the company first goes public. Palantir has given employees more than $700 million in stock, over the past year alone. It's essential to understand why this is happening, and that's because it motivates employees. Giving employees stock gives them the same motive and incentive, which is growing shareholder value. Although stock-based compensation dilutes other investors, it's a net positive as long as Palantir grows top line much faster than the dilution effect. Here's why I'm not worried. Stock-based compensation per quarter is steadily trending lower. Alex Karp isn't a dummy. He doesn't want to destroy his net worth or the value of Palantir. Dilution is fine so long as the revenue growth remains high. Now, let's wrap up with some option analysis on Palantir. The first thing I'm going to look at is OptionFi Software. It's currently saying that selling a put option on Palantir is a pretty decent bet with a B+ rating. Now, looking over at the sell put strike, it's at 8.5, expiring for 6/3, which is this week. Now, if I go into Robinhood, I want to show you why this is a really smart idea. So if you sell a put option, you can actually get a discount to the current value of the stock. It's currently trading for $8.71, but if you sell an $8.50 put option, you're actually going to collect some premium and you're actually going to buy the stock for cheaper than what it's trading at on the market. I really like this play because it's a short-term play, but even if it does go below $8.50, you still get to keep $18. However, now you get to buy Palantir stock at $8.50, which is a little bit of a discount from the current price of $8.71. So I would personally really lean towards selling put options on Palantir. I don't know if it's going to skyrocket in the near future, but I do know that investing in Palantir in the long term makes a lot of sense. In the cheaper price that you get, the better value you're going to get in the long term with your compounding rate of return. So I would love to buy Palantir at $8.50, but I also wouldn't be opposed to buying shares and then selling covered call options. When you sell call options, you have a little bit of a different benefit. You're going to collect a little bit less premium here. However, you have more room for upside because Palantir stock can go from $8.72 up to $9. You'll see some capital appreciation, plus you still get this $13. You get to keep it regardless. Now, going back into selling a put option, I want to expand this put option and show you what I'm looking at right now. The bid and the ask is very tight, which is a very good thing. One of the biggest questions I get is, why can't I close a Christmas tree? And that's because the more complicated the strategy and the wider the bid-ask spread, the harder it is to get filled. Now, for Palantir, when you sell a put option, it's going to be very easy to get filled because the bid is 17, the ask is 18. You're going to get filled at $17. That's going to be a very easy trade. Also, looking at the volume, it's 5,532 options that have been traded literally in the last day. That's a whole lot of volume. The open interest isn't that high. This actually means to me that a lot of people are sparking a lot of interest right now in selling put options or even buying put options on Palantir. Now, the people that are buying them are usually scared investors or they want to hedge their portfolio. But if you're selling these options, you're going to be collecting really good premium. Now, the implied volatility is super high. It's 95. So amazing. This is probably why OptionFi recommended this, because the implied volatility is 95.81 currently. That's huge. You're going to be collecting a lot of premium. It doesn't seem like a lot, but this is actually over a 2% return in just 3 days. I mean, 2% compounded monthly is over 8%. And in the year, you're going to be more than doubling your money if you were to consistently trade or sell a put option on Palantir in this example. The delta is 0.37, which means there's a 0.37 chance or a 37% chance that the stock is going to fall below your strike price, but that's fine because you want to own Palantir. And if it doesn't go down there, well, you make over 2% in premium. So either way, this is a win-win position. The theta is actually really high. It's about $5 a day over the next 3 days, which is really high for only risking about $850. So this is a small account trade that I recommended in my Discord community. If you want to follow along with all my trades, again, there's a link in the description. I hope you enjoyed this video and I'll be doing more updates on Palantir soon.